More than inflation is rotation, right? We talk about that all the time. Apparently now the big rotation story is money leaving the U.S. dollar going into other assets, including emerging markets. But is this the right play, David?
Yeah, I think if the dollar has peaked, which it looks like it may be, at least in the short term, I think that does bode well for emerging markets. And I think, the slide in the dollar is synonymous with the global recovery. So, right, as, economic activity comes back, as international travel comes back, as supply chain issues hopefully abate, yeah, that's great for outside of the U.S. So I think emerging markets make sense. It's a rotation that's not really talked about a lot. So, Charles, I'm glad you brought it up because that is, I think, where money will be flowing here.
All right, now, something very similar to that, right? Much has been made just, again, over the last several months about the concentration, right, of the influence of the top 10 names in the S&P, how much influence they have over that. And many are comparing it to the tech bubble, right? And they say, well, that is a clear sign we should be selling. But I personally think it's a mistake. However, David, I saw you, I think I saw you with Stuart Varney. You sounded pretty bearish to me now. You got a PEG ratio now of 1.5 on average versus 4 back then. Do you think that these names, which, by the way, are sending the NASDAQ lower today, should be sold here?
And Charles, I'm not bearish. I'm just realistic, right? And, when it comes to these large names, though, no, I think this is different, right, in the sense that a lot of these big names are still very profitable, right? So you look at Amazon, $30 billion in net income. You look at Google, $60 billion. Facebook, I just was looking at Facebook. Facebook is trading at a lower multiple compared to Coca-Cola and McDonald's. Should Coke and McDonald's be trading at a higher multiple than Facebook right now? No. So I do think that these large cap tech stocks with wide moats, I still think they're going to be okay, and we should be buying on weakness.
David, you got a favorite idea right now?
Yeah, I like reasonable tech. I know it's boring, but IBM is a market leader in AI. So I think with a 4 or 5% dividend, great growth prospect in the future, and a reasonable valuation, Charles, IBM to me makes a lot of sense.
I know. I got to tell you, I've been burnt on it so many times just thinking, this is the year. This is the year. This is the year. But I will tell you, it does act pretty good. Larry, David, Danielle, thank you all very, very much. Really a great start to the show.